More now on that strong report on the economy's growth in the third quarter. The gross domestic product grew at a rate of 3.5% during the summer months, thanks to big gains of business spending, sales of U.S. exports, and more military spending. Steve Liesman breaks down the first look at the health of the U.S. economy and what might be ahead.
Maybe Janet Yellen and the Fed knew something. Some eyebrows were raised Wednesday when the Federal Reserve ended quantitative easing and spoke confidently about the U.S. economic recovery in its policy statement, citing solid job gains. But today, the government announced U.S. job growth in the third quarter topped expectations with a 3.5% rise in gross domestic product. Coming on the back of a strong second quarter, it was the best six-month gain for the U.S. economy since the Great Recession ended. 4 of the past 5 quarters have seen growth north of 3%, and that to some means the Fed needs to move even faster.
To me, the trend is sustainable. Clearly, the economy does not need excessive monetary policy, but we're going to have it. We're going to have this Fed continuing to pursue extraordinary accommodation until it's obvious that inflation or inflation pressures rise, and they're not there yet.
Yet there were details in the GDP report that raised questions about whether the strong numbers could continue. A surge in national defense spending seems unlikely to repeat. Trade added 1.3 percentage points to the 3.5% number, but a strong dollar could weaken U.S. exports. And consumer spending growth was middling in the third quarter. It will have to accelerate in the Christmas season if the rosy economic story will maintain its shine. And all of this with economic weakness over season, with the Fed's next move, all agree, to tighten monetary policy, even though that move may not happen until well into next year. So attention now turns to data for the fourth quarter, because in this post-crisis economic world, even when you have a number above expectations, confidence runs very low, and a new round of pessimism is just one data point away. For Nightly Business Report, I'm Steve Liesman.